Hello traders, thank you for tuning into my video on the RSI and stochastic strategy. This is going to be a quick and simple strategy that can help you catch moves such as this one, almost 400 pips, and this one, almost 600 pips. So please watch the complete video just so you can have a complete understanding on how it works. It's straightforward. You just need to put the RSI indicator and the stochastic indicator on your charts. I already have them here on mine. This is a pound-dollar 1 hour chart in the MT4 platform. You can use any trading platform that you like. So what we're looking for is, let me just explain each indicator quickly. With the RSI, when price is above this level, the 70 level, the market is considered overbought and we're going to look to sell. Vice versa, when price is below this level here, the 30 level, the price is considered oversold and we're going to look to buy. Stochastic has the exact same principle. Let's just zoom in. However, on the stochastics, when the price is above this level, the 80, we're going to look for sell trades because the market again is considered overbought. Vice versa, when price falls below this level of 20, the market is considered oversold. So we're going to look to buy. So there will be instances here when you can see that they're both oversold. It doesn't mean you jump straight into a buy trade. You need to look at the bigger picture, which is what we're going to cover here, so you can time your RSI and stochastic entries properly. Right then, so how do we know that this is the trend that we would have taken? Right, well, the first thing that we do is we look for the RSI to be extreme and show divergence. So divergence to the downside there, the RSI is extreme, it's in the overbought area. Then we need to look at price. We have a nice resistance level here. If we honed in the lower chart time frames, you would see that this is held up well. Then we have the candlestick patterns of a shooting star, hanging man, spinning top, inside bar here, all very bearish signals of a market reversal, which does happen. The RSI is telling us the market's overbought. It's diverging downwards. The stochastic oscillator is in an overbought zone as well. So that's suggesting let's sell. You can try and jump in at the top there. If you did a happy days, you would have caught the majority of the trade there for over 300 pips. Or you can just wait to see how things play out. And for example, wait for the trend to start, mark your level of support here on this little pullback and enter when you have a breakout. You can see that this level of support then became resistance. It held up well. There could have been an entry point there. Had you entered here, your stop loss could have been just above this resistance level, which would have been a 15 odd pip stop loss, which is very good for the 1 hour chart time frame and would have gave you a great risk to reward ratio on this particular short trade here. Okay. If you're even later to the party and we're around here somewhere, still ample opportunity to get in on the trade. You just mark your support levels, wait for a breakout and enter downwards. Again, you can trade from resistance as well. You actually have a nice triple top pattern here. Triple top being where the resistance is touched 1, 2, 3 times. You can draw your neckline and a breakout. And a breakout again to confirm the entry. Okay, obviously candlestick patterns, always be aware of them. I have lots of videos on candlestick patterns you can use for timing your entry. You have a shooting star there as one example. Okay, another one there. Okay, you can use the stochastic to enter on the, so we've established a trend and now you can use the stochastic crossing over in or around the extremely overbought zone for entries, potential entries. So there would have been an entry. There, you can see another good entry. There, another good entry. Good thing about this one is you've got your lower highs. Okay, you can see there's ample opportunity as the trend is going. Stochastic crossover in the extremely overbought zone here, coincided with shooting star candlestick pattern there. Again, lower highs, another solid entry to get you in this trend with plenty of gas over 250 pips worth left in the tank. So you can see that when you combine the RSI with stochastics, it can give you good indications of trends and when to enter said trends, and when to avoid entering. For example, if you thought, okay, great, I'm going to sell here, we're in a downtrend, fantastic. No, because the RSI is oversold, so you don't really want to buy when the RSI is oversold. Same here. Oh, we're in a downtrend, fantastic, let me enter. No, RSI is saying it's oversold, wait for the pullback. Okay, the stochastic there, keeping you out of trouble again. Wait for the pullback. The pullback happens here. Stochastic crossover, even further down the trend. RSI is not oversold. Again, trend line, lower highs. You know, it's self-fulfilling. Once you know what you're looking for, it tends to play out as you expect. 1, 2, 3, that's a strong level of resistance. We can be trading off that and be pretty confident that price is going to continue going where we anticipate. You have a nice wedge pattern there. You can see the breakout of that wedge pattern was strong. Probably for quite a few traders watching this level here. Don't always have to do your support and resistance in a straight line. You can, of course, angle them, okay, as we did with this particular wedge pattern here. Okay, and then as we come to the end of the trend, you can see this by the divergence to the upside of the RSI, saying that perhaps this move's coming to the end. You have the same on the stochastics. So you might not be looking to sell. We definitely don't want to sell low. And if you zoom out, you can see if you're trying to get in here, you probably are late to the party. You had ample opportunities before. Don't try and force a trade. You can use this strategy on any trading instrument, any time frame. But yeah, it's good to combine the RSI and stock signals with price action analysis, candlestick patterns, support and resistance. And of course, good money management. Talking of money management, in this move, as it was moving down, I would have been trailing, moving my stop loss. So let's just say we got in on this breakout here. Once price had stagnated, I would be moving my stop loss at least to break even, if not locking in, say, half around here. And then once it breaks down further, I would have moved my stop loss above this level of resistance. As price kept falling, again, I would have moved my stop loss down here, just locking in profits along the way. So when the price does turn around, we've maximized the move as much as possible. You can obviously close out part of the position if you want on the way down, just to bank some pips whilst locking in the rest and allowing the trade to play out. If you exit prematurely, you get excited, carried away, oh, I've made 20 pips, let me get out. Don't worry, you can get in again. Just try not to get in too late, which is what the RSI will help you avoid doing. So this is a sell trade example. Now, if we come over to, let me just remove that line. So following on from this sell trade, we know we have our divergence to the upside here already because we've marked it with the RSI. So now we're going to look for ways in which we can trade this new trend here. Okay, so what we're going to do is we're going to probably mark support around, resistance. So we've got some stagnation here. Probably going to wait for the trend to form. This is strong levels here. Okay, yeah, they held up well. So we're going to wait for the trend to form as it does there. Forms nicely. We can see, great, we're in the uptrend now. Don't necessarily want to try and pick the bottom because price could continue down. We can be getting whipsawed in and out of a ranging market. So wait for the trade to form. RSI's not overbought around here. Stochastic, so if we just pick the stochastic crossover, so this is where the stochastic comes in handy. There you have the crossover in the extremely oversold zone. and look for a crossover to the upside and place a buy trade. As you can see, that would have been a decent entry. Could have placed our stop loss below the recent swing low, which is there. And zoom out, and still plenty, over 400 pips left in that move. Again, you could have trailed, used a trailing stop on the way up, moved your trailing stop there, your stop loss there, there. As price is going up, say price is here, move it there. Price goes up here, you know, move it there. And once you see all of this, indecision, stagnation, price falling, lower highs, you're going to look to exit your position anyway up there. Okay. Candlestick patterns, again, keep an eye out for them. They can be good for timing entries. You have a hammer there confirming that particular entry. Yeah, so there's various ways in which you can time your entry. If we go back, you did have a stochastic crossover there, which probably would have been early on this particular trend, but still the RSI was, you know, the RSI was showing good divergence to the upside. And to be fair, in the stochastic crossover oversold, that could have been an opportunity, or at least you would have kept an eye on the resistance and the support. And then once you had the breakout, you can see from these green bars, this one in particular, once price broke out for that level, it held up and continued up. So there's probably a lot of traders watching and anticipating for that to happen, as it did. Okay, let's look for a stochastic crossover. So we had that one. What others have we got? Stochastic crossover, remember, in the oversold zone. Stochastic crossover, oversold, going upwards. RSI still not overbought, so potential entry point there. Trend lines as always, we're still going in an upwards direction. Another entry point. Just move that one out of the way. Stochastic crossover in the oversold, not overbought. Potential entry point. Have a good outside bar there, as well as a breakout of the resistance. That's actually an ascending wedge pattern there. I do have a video on wedge patterns which can be useful to confirm trade entries. If you enter these positions, you can use the previous low for your stop loss. Stochastic crossover, oversold, crossover, and again it's going upwards. And this is where we start to see the RSI, the RSI breaking down. So you perhaps might not want to get, or you probably wouldn't want to get in once you see this mess, especially following on from that big candle there. And then just to confirm that, you have the divergence on the RSI to the downside. Already the stochastics as well is diverging downwards. Lower highs, maybe avoid trading there. And I mean, you would have had ample opportunity to enter throughout this move to the upside. But again, you don't want to be too late to the party. So you can see there, the stochastic, oscillator, and the RSI, these are just using the default settings, but they can be powerful indicators when combined, particularly the RSI for avoiding overbought and oversold markets against you, the stochastic for timing entries. Just always mark your trend lines, support, resistance, and keep an eye out for candlestick patterns, and most importantly, have good money management. So with favorable risk to reward, you know, at least I like to aim for 3 to 1. So a win is 3 times a loser. If you had a 20 pip stop loss, you want to aim for 60 pips profit, but it's not always fixed like that, especially if you're using dynamic prices for your stop loss, such as swing low, swing high, previous support, resistance, and a trailing stop as well. Like I said, to lock in as much profit. It's not always set in stone. You're going to go for a set amount of pips. You might just want to ride out. I mean, if you get in this trade and you're determined every trade you're going to target 50 pips, and you entered on this stochastic crossover and you said, okay, I've got my 50 pips here, happy days, I'm going home. I mean, well, unless you're going to re-enter and keep paying broker fees and spreads all the way up, spreads and commissions all the way up. I mean, you left a lot on the table, didn't you? So you can always lock in the trade at break even, move your stop loss below recent lows on an uptrend and recent highs on a downtrend, just so when price does turn around, you've maximized the move. Okay. Thank you for watching. I hope you found something useful in this video. Please like and subscribe. It helps me and the channel, and hope to catch you on the next one.